Thank you for inviting me. The Financial Services Consumer Panel, for those of you who don't know it, it's an independent statutory body, and we advise the UK regulator, the Financial Conduct Authority, on the consumer interest. So we nag the regulator and say, hey, what about this? So that's my job. I also sit on the FSUG as well, which does a very similar job for the European Commission. But, well, look, I think pretty well everything has been said that I was going to say, and I'm sure you're dying to come into some debate. So I'll be very, very brief. Just a couple of things. I mean, thinking about retail financial services from the consumer point of view, what do consumers want, really? And I've struggled. Let me tell you one thing. If you can fix this, I travel quite a lot in Europe, of course. I just wanted to be able to go online and find a euro-based bank account. I just want a euro bank account. I don't care if it's in France, Germany, Belgium. I don't care where it's based. Can I find one? No. If I could find one, could I get an account without going over to Belgium, France, Germany? Nope. Oh, he's saying, yes, I can. See me afterwards. And this seems to me kind of slightly crazy. Look, I can unlock my iPad with this. There must be a technology that will take this and transport it across Europe so a bank or other provider across Europe will know me as the customer through this, just my finger. So I don't believe the technology is a barrier. I really, really don't. So I think we should be really ambitious, but also I think we should be slightly cautious as well. People do not want more choice. And if I hear Commissioner Hill say that again, I think I will strangle him. They want better choice. They want easier choice. They want to be able to understand the market. They want information that helps them understand the market. They don't want complicated products. They don't want 35,000 different, funds that they can choose from. They want to be able to interact with the market in a way they can really understand. And I think that's one big thing that's missing from this is how we do that. Now, others have talked about simple, standardised products. Oh boy, have we tried those in the UK. And of course, producers don't want to provide them because they don't make much money. They make money from complexity. One thing we did try, which actually did work a little bit ages ago, about 4 initiatives ago, we had something called stakeholder products. And they were just very straightforward. There was a stakeholder pension. And the rule was this: if your advisor wanted to sell you a pension that was more complicated, more expensive than the basic stakeholder, he or she had to explain why it was better and why it was more expensive. And hey, guess what? Not too many of those really complex pensions got sold. So the idea of a benchmark product, and of course you can make more complicated things, but you have to explain to the consumer why it's better and why it's costing more money. That would be useful. So a little, this thing about competition, again, if consumers can't meaningfully interact with the market, competition only works if consumers are moving from what they've got to something better, whether it's cheaper, whether it's delivering better value for them. But if they don't understand what they're buying, then they're not moving necessarily to something that's better or something where they're going to be treated better. And that's also a big issue. Excuse me. I caught your cold. Moving swiftly on to a couple of things on digitalization. So this is good for consumers in some ways. It makes our lives more convenient, The old, I can do things more easily as a consumer. I can whiz my card and make a payment straight away. So there are things, I think, that it does make my life easier. I can take a cheque and take a photo of it and pay it into my bank. So there are a whole load of things that make life easier, and some of those things are also good for people who've been traditionally excluded from financial services because they can use Skype to talk to their bank. They don't necessarily have to go into a branch. So it can be good for vulnerable people as well, and better know your customer will help increase access as well. And then you think there's also a couple of things on digitalisation. I think really I'm talking about big data here. Now, an issue about big data is, again, that can help with access. It can help maybe somebody with a thin credit file to get a loan because there's lots of other information the provider can find out about them. But on the other hand, what it does in the credit and insurance markets is it demutualises risk. Because I can target you as a customer and I understand the risk on you better, that means the risk pools get smaller and smaller. So people who currently get insurance or maybe a loan will find out that they might not get one at all, or they'll pay a much higher price for it. And I think this demutualisation of risk is quite an important policy issue. The other thing we see in the UK, Ferry was talking about our advice market, and yes, there are some upsides to having a much better regulated market, but a lot of people can't afford advice, or they don't want advice. They think it's not for them. So we see now the rise of, does the term robo-advice mean anything? Yeah, okay. And robo-advice is sort of fine up to a point, except the way it's done is that people think they're getting advice. So the robo-advice algorithm looks at your risk profile, etc., takes you all the way through, and then at the end says, here's 10 funds you can choose from. And of course, at that point, it's execution only. But it's not necessarily clear to the consumer that they're losing a whole load of protections by in effect, picking their own funds. So there are big risks there as well. I think that's pretty well all I wanted to cover. I'm sure we'll pick up a lot more points also in the discussion. So thank you very much.